So today we are very fortunate to be joined by three, and I mean this in the nice way, industry veterans who are joining us up on stage. We got Charles Gillies from RCF Innovation. We got Ivan Gustavino from Atrico, and Dallas Wilkinson from Austmine today. You can be Dallas? Fantastic. Alrighty. Everyone good to go?
Yes.
Fantastic. How about the audience?
Yes.
Are we good to go? Love it. All right.
Yes.
So to start us off with, I thought we'd cover off sort of on the macro piece, guys. Can you talk to us, around some of the technological trends? Like obviously there's conversations around how tech's transforming mine management. But if one of you could kick us off with some of the broader tech trends that you're seeing, that'd be a great place to start.
Okay, I'll start as the tech guy. First of all, Dallas Wilkinson, chair of Austmine, and many other things after a long career in the explosives industry as well. I sort of just start with that because I'm biased around the breaking of rock. Looking at the trends going forward, we're talking around obviously automation, robotics. You hear a lot about that. We hear a lot about the digitisation, and for me, AI comes over all of those ones as well. But think about energy efficiency. That's a really big trend we've got to be talking about as we keep moving forward, because energy is key. We heard this morning a miner talking about the change in how they're going to mine their ore. It's just actually Fortescue, around having all the ore mined during the day, stockpiled on the ROM pad ready for evening, so it's more efficient at night, so there's no solar for them. So I thought that's actually a great thing for us to bring this panel, because that's a way of changing operations based on energy, for example. And of course then for me, processing as well is going to be a big area of change, and the trends towards more dry processing, because water gets more and more challenging for us to get. We're hearing around people like Elon Musk looking for water on the moon for future mining. So water comes a key theme. I've seen operations in Africa where you can't operate 7 days a week because there's no water. So water's going to be a big issue for us as well. Of course, we're going to see no tailings, and then the trend longer term will be zero entry mining, where no one goes underground, no one goes into the mining operations. It's all done automatically from many thousands of miles away, as we've heard. On top of that, I always like to plug in the blockchain piece as well, because blockchain's about where you get the validation of where the products actually come from. You think about it from farm to plate, in terms of the beef you might want to eat, where it came from, which paddock has been in. Same for your ore, where's it been, which mine, and how's it gone through the whole processing. So that's ethical gold, for example, where you might be able to either get a premium for that product, or you may actually have a penalty on those who don't have ethical products like nickel. I could go on all day on this topic, but I probably should stop there.
Yeah, no, Dallas, there's a reason you've got the doctor in front of your name and I don't. No, very insightful, and glad you also understand the blockchain, because I'm still trying to get my head around it. So well done there. Ivan, we might jump to you. You sort of, I know, very strong in a lot of the software space, and got an extensive career in advising a lot of these early technology companies. What are some of the trends you're seeing from your client base at the moment?
Maybe, I don't know, Dallas just took everything off us with nothing left to say anymore. Anyway, no, I think we're probably seeing more of a lean into connecting software to the sensor level, and those two things coming together, which touches into AI wrapping on top of it. But I think AI is going to be just homogenous shortly and critical, but there's so many of those tech projects that are orphans already. They're not really adding value, is the way we look at it. But we think connecting these two things is allowing to build a moat. And, all shareholders investing in these companies, the tech is critical, but to have a sustainable competitive advantage is more critical now than ever, because it's pretty easy to mimic. It's pretty easy to follow. It's pretty easy to have fantastic ChatGPT engines generating noise out there and what people are doing when it's not really happening. And so we see that connection being quite critical in terms of differentiation. And the robotics automation end, I think, is super important for the underground type of growth that we're seeing in terms of where mining is going. The blockchain thing, I'm fortunate to advise a company which is working with ABC, the biggest gold producer here, and they are the guys that do what you just mentioned, Dallas, and they have a product and it's just going unbelievable. And there is a higher value if you can show where the source is emanating from, and handle that through that chain process. So, yeah, I think just stay with those couple of things for now.
Yeah, ABC, it's funny you touched on them. I'm not sure if a few of you have walked around and picked up the blocks of gold around there. They are bloody heavy. Like, I 12.5 kilos. My gym weights must be lying to me. Anyway, Charles, let's go to you. It'd be great to unpack sort of how you think through, some of the technological trends in your space. Obviously, you run a fund, so you're trying to pick the next winner. Yeah, talk us through that.
Well, it's very difficult to follow these two, I have to say, but I will do my best. I don't think I've got any particular insight in terms of the particular technologies that are being useful, because I believe you've covered it off very well. What I would say is the lens that we look at is what can make a business, what can provide value to mining customers, how can you express it, how can you protect it. So I think a lot of the way that we think about things is what is the innovation and what is the business that underlies that, and how can that be something which is commercially successful. And of course, if you've been commercially successful, you've got to create value for yourself. That's nice, but more importantly, you need to create value for your customer, for the mining company. So I think that's a lens that we tend to apply to all these things, and we are looking in all the areas that have just been mentioned, because there's a lot of great opportunities, a lot of really interesting stuff which is occurring, and making that into a business is part of what we look to do.
Yeah, awesome. And not that we want to bore everyone with definitions, but I thought it could be prudent, given the discussions around mine management, to just quickly define that. And given two of the panellists said I have no idea, Dallas was the only one who put his hand up. So Dallas, can you just define quickly what mine management is for us?
Okay, having worked in a few mines, I'll share my views, may not be the correct official view. When we're talking mine management, for me, it's mine operations, running the mines to produce a product. An ounce or 12 kilos of gold, if in your case, or coal, or whatever it's going to be, critical mineral. That's what you're trying to do at the end of your mine management, so I get that out the door. That's the end game. How you get there, from exploration right through mine planning, and obviously the planning is very important there. You're doing your drilling, your drill blast, load haul and processing, and then out the door with the final ore, whether it be a mixture or a crude ore like it is. For me, what drives mine management is around efficiency and productivity. And that's also what hinders technology taking off. So just think about that. If I give a mine manager a KPI, a number of tonnes through the gate every day, in terms of on the ROM pad, or whatever it's going to be, that ore on the pad, dug up, drill blast, dug up and it's processed, he's going to focus on that. If I say to him, I want to bring this new tech in, that one of these guys have got in their fund, they want to try this new tech, he'll say, really? Go away. You're going to disturb my KPI, I'm not going to get a bonus this year, bugger off, sorry. So they're not going to do it, right? So that's the challenge we have as an industry, is that actual piece of trialling our product. First to be second. And I get a lot of people come to me and say, oh, I want to work with mine management to get my product in. I want to talk with the majors. No. Start small, go there later. Start with a quarry. Start with a smaller mine and work your way up. So mine managers often work in silos. If you want to see that particularly evident, go work in Russia. We can't these days, but previously, very strong silos that no one spoke to anybody else, because your drill and blast budget, that is your budget. You don't care if that impacts someone downstream. I can do it more efficiently for the processing guy. I'll spend more money in drill and blast. No, not going to do that. So that's what the problem to get to there. And the other parts of mine management then are the legislation, ESG compliance, the demand for the product, the geopolitical issues that come into the supply chain piece. But for me, the mine management, that's what we're talking about to drive the innovation at the top end, to get it to work, to try and impact that. We know the challenges, what's in the bottleneck there. For me, I have a very simple rhetoric. No METs, no mining. So no mining technology companies. If they don't exist, the miners are going to struggle. They'll be the same thing the same way, day in, day out, because that's what it is as a process. Don't change the process. The output's always guaranteed. Technology is a disruptor. So what we need to think about here is connecting the whole thing together, work collaboratively. The IP is a really important part of that, and just keep the communication open so we understand it drives everybody involved, and meet with those round tables between all the people involved to get the outputs you want.
Great answer,
long
Dallas.
answer, sorry.
No, fantastic answer. And I think one of the key points that resonated for me is the incentive alignment between everyone in that value chain. If you're simply going straight away, oh, we want to talk to operators about this new piece of tech, they're probably not going to be too receptive when that's not part of how they get paid. So I think to touch on that, Charles or Ivan, it might be cool to pick on sort of the incentives from the stakeholders within the environments with which you operate, which is obviously slightly different to Dallas. So maybe we go Charles from the funds point of view when you're investing, trying to find unmet needs, and then Ivan when you're advising clients on sort of the back end of their journey.
So I agree with you, Dallas. I think you've got to understand the way that mining managers work, and it's about throughput, and I don't want anything to risk that. And I think if you go and use the word, I've got a cool piece of mining technology for a mining manager, what they will hear is a number of things, mostly negative, but pretty much, you are going to not help me hit my goal. So if that's where you start the conversation, that's actually about you, not about what you're going to do for them. So what you need to do is go and say, I understand what you're trying to do. What I'm going to offer you, this product or service, is going to improve your cost. It's going to, reduce your cost, improve your productivity, make the mine safer, make it more productive. So that's where the conversation has to start. So when we look at investments, unless we can convince ourselves that that is actually what this particular product is going to do, then that's the starting point. The second thing is you have to school the management teams to express it that way to the mining company. And it's not just the mine manager, there's a whole complex web of relationships, of veto holders, of influencers, of actual profit holders, head officers, local mine managers, and you need to navigate your way through that very complex web of relationships to sell something. So if you can understand that and you can express your product the right way, you can sell very well, but it's not about selling technology. It's about selling something which is going to make that mine manager's life better and make the mine work better. And that's where you need to start. And that's often the tricky thing that, technology companies don't always get.
And just quickly before we jump to Ivan, as an allocator of capital to opportunities in this space, is that something that you traditionally expect, a target to be able to present to you, or is it something that you're willing to sort of get hands on and be more part of?
It's a bit of an iterative process, because if they turn up to us and they actually have no idea and haven't really spoken to customers, they probably won't make the cut. But it's quite often they'll have a reasonable idea, but it's not great, or they haven't even thought it through enough. But if it looks like the value's there, that's definitely going to help. So if they're at ground zero, they probably just won't make it through the gate. But we will work with companies, and often you don't know until you start working with them exactly what the value is and how that will. But we would argue that's part of our value add.
Yeah, fantastic. And Ivan, just to give everyone some context sort of to your role, you've been pretty pivotal in some of the growth capital financings and exits of some of these tech companies, often involving large end of town, Woodside, Wally, few of the big names. It'd be interesting to sort of talk through that process and the incentives of the various stakeholders there.
Yeah, it's really hard being the last one to go when they're so good either side, and you're trying to find out how you're going to one-upmanship them, and I have to do that. So
I went last time.
I think that horses for courses, all very different, and strategies are very different. We tend to, when we're advising, we start with an end in mind, and the comments both Dallas and Charles have made are really spot on to what we understand and we've been able to see as winning formulas, if you like, or winning advice and practical advice. And that is, do you go to a large group and have 9 stakeholders that you're trying to win in a large tender when you haven't really demonstrated, and proven up a track record yet? I mean, that's pretty hard to pull off. It's been done, but it's rare. Should you stage, then how you go about it. And we tend to bring the value economics view in from the start, and we want to work from that as the value that we can bring to groups. And then we look at business models and how they're going to be absorbed, accepted, and we want to understand how disruptive they're going to be to the adoption of any new technology. And we tend to work with some of the disrupting technologies, and it's quite a hairy place to be. It's really a targeting exercise. It's a staged exercise. It's a clinical exercise. We do have a scientific approach to it. That's because I work with PhDs. I don't have a scientific approach at all. I just talk nonsense, but they're really good at doing that stuff. And we tend to look at that from an end state. Where is that value going to be created? Do we need to come up with a market entry strategy or an adoption strategy that will be acceptable going into a mine? It's really hard to go and actually say, take this on and take your eye off the ball. So if we can't demonstrate immediate value, if we can't connect a network up to, basically get validation, and we might call that social validation or track record, we will not go to that target. We would actually send somewhere else to build that staging approach. That's all I can say with such good commentary around me, which has nailed it pretty
Fantastic, Ivan. Thank you for that insight. And Dallas has given me the eye here. So
I just want to summarise what we just said in one word. It's about risk. So between yourself and the mine manager's point of view, you're managing risk. That's what we talked about with what we heard before from Charles and Ivan. It's around, they've got to manage risk on their site. And so how they do it with their operational piece, whether it be a capital piece, it's all about that risk mitigation to make sure they guarantee an outcome.
Fantastic. Great way to sort of summarise that part of the discussion. And one point I want to pick up on from Ivan's piece was this whole idea of track record. Inherently investing in technology, there's a level of uncertainty around sort of what you're investing in and who's there to sort of stump up and take that initial risk. And normally risk is done in the form of capital because we do live in a capitalist society. So in terms of who is stumping up the capital for these early innovations, where are the pockets of funding and at what stage do they come into the mix? Throwing that one open to everyone.
I'll start then. Get first in. I think if it's early stage, I mean, what we like to do is bring, the industry type of veterans in that have been around. They can open up the doors. They can understand the risk, the value proposition, and they don't have to get hands-on, but they can actually understand that there's going to be growing pains. You're going to face challenges where the PO doesn't drop and the cash flow is looking thin and everyone's worried and looking at each other and someone's talking VA. Being in those boardrooms, being around those type of dynamics, we want people around us in the early days that have seen that, lived it, experienced it, but they also know what that risk return can be, and they can also bring value outside of being in the boardroom or being in the company by opening up their relationships. So in the earlier stage, I say that, and I think that then builds a good register that you can get in touch with a more sophisticated fund. They'll understand the register's well managed. They understand that the board, the structure, the governance levels are, right size for where they are at that time. And that type of investor group at that stage comes in. And, the other stages I know everyone's going to talk to, I know them, but I'll hand off to Charles.
Sure, and I suppose I'm talking from our particular point of view. We see ourselves more as investing in businesses. So that means the company has revenues, it has customers, may not have a lot of revenues, may not have a lot of customers, but it's actually got something. So that takes out a layer of technical risk.
Just quickly, when you say we, Charles, are you mainly sort of privates, like family offices?
The fund, it has investors in the fund. So investors in the fund are endowment funds, US pension fund, some local institutions from Australia. So, we're a fund-like structure. So that's what I mean by the royal we, which is a very royalist term to be using. But I think it's more...
Very royal name, Charles.
There should be more King Charleses out there, really. So my point was that it's really, for us, it works better when there is a company, the fundamental development product risk has been taken out. I mentioned before about how you've actually got to have a product to sell. And the mining industry is tricky. So if you're trying to sell something completely novel, innovation or technology, that can take a long time. We just don't want to bear that risk, frankly. And I'm sure Ivan helps people at that level, and that's great. But when there's a bit of revenue in the business, that's when we can have a view, well, we think we can see how this could be used elsewhere. And so there are probably other, I won't talk my own book. The people like us will invest at that point, is probably what I would say. Yeah.
Okay, from my point, I get involved very early in that picture very often. When people come to you with an idea, they haven't got a first customer, you've got to help them with a value proposition, how they're going to sell it. That's the early stage, and they've probably got their family investing and their friends investing. They get a cash runway and they go, oh, shit, I'm learning how to cash because they've got about that burn rate. And then not getting their debts collected or have another problem, putting the systems in place to do that. Then you work through a process, well, okay, what's the end in mind here? Where are you going to be in 5 years' time? Go, well, I think I want to be retired by then. Go, okay, that's now a different conversation we're going to have. That's where these guys come in, or other ways of getting investment in there, such as government grants. And there's a lot of good grants out there for governments at the moment. I've got a client who's won 6 or 7 in the last 12 months, working with universities to develop the technology further, which have been really quite productive, to the point where you get to the stage now where you go to the next level. And that's the part you've got to think about, how to extend that runway enough to develop your product properly, the value proposition understood, so then you can go to these guys with some real value. Otherwise you get it too early. You first start to dilute your own holding of that company, and so your shares start to go right down to this point, you have no ownership at all in the organisation, and you've lost the technology as well. So they're the things you think about early on, and I think with them probably covered the whole gamut then.
Yep, no, fantastic. And it would be remiss of me talking about disruptive technologies to not talk about space, given sort of the 30 minutes of argy-bargy we had in the panel preparation. Can you guys maybe give me a bit of insight into how space is playing a role in mining? And yeah, Dallas, maybe you kick us off.
This came up because of our pre-chat before we got here. It's off the piss, so to speak, if you're a skier. But just a few weeks ago, I was invited to give a presentation at an off-Earth mining forum. I was asked to get on the panel. And as a Mets guy for many, many years, I think, okay, what's that going to do to our processes? Then I started thinking, you can't blast in space because you create asteroids. So you've got to do things very, very differently. Then you start getting through how to get a process and how you get to do it. Big haul trucks there? No, not a chance in hell. So you start thinking of a thing called swarm mining. I'm going to call it ant mining. It's like an ant's nest where you have no one underground, hence the zero entry mine we talked about a few minutes ago. And so you can imagine now you've got these small little vehicles going down, pick up small material, bring it back up, but on a massive scale. And so that's one way of doing it. So the space mining is going to challenge our thinking. Same as deep sea mining, the same as mining in other sorts of extreme areas. So it's all about doing it environmentally responsibly, in space as well, but it's about challenging how we do things today to look at things differently. And it's that piece of the paradigm we're going to change through things like space mining talked about. Will we see it in the next 10, 20 years? Well, a lot of people think they are, and there's a massive conference right here about 2 weeks ago that brought, I think it's about 10, 12,000 people here talking about space, as well as to the New South Wales government, over $50 million worth of extra revenue. I'm talking about space in the future. And it does challenge our thinking. It's going to be part of how we've got to think going forward. It's going to disrupt the models we do today. It's going to impact back on our mining, and it's going to help us change how we think today. So I'm quite excited by it, very excited in fact, because it's going to change everything we do.
Yeah, and just quickly before we throw to Ivan and Charles, are there any companies that you can think of that are already doing a lot of great work in that field today that maybe our audience can look up online on their phones?
Absolutely. There's one particularly who's also a director of Austmine, so I'll put a plug in for her, Flavia. She's the co-founder of Fleet Space. That's Australia's fastest growing company from the AFR last year. From 10 years ago, and I was with her at a board meeting in her offices about a few weeks ago on her 10th anniversary, where they're now about $800 million to $1 billion company. They've got 8 satellites in space. They've changed the way we do exploration on Earth from, say, 4.5 years to do it down about 3 to 6 months. They've got a whole lot of technology coming out there. They're planning for the work in space on the moon, asteroids for the future. They've got their tech going to the moon next year. That one's already very much a reality. If you talk to Flavia, she is incredibly enthusiastic about what's going on in that space. There's another company I met at that forum called Off-Earth Mining, and they're focused on underground mining to start with. And the things I talked about earlier, the very small, non-blasting ways of grinding and getting the product out to then high process from there. So there's a number out there working. I was quite surprised when I got into that space, so to speak. But yeah.
Fantastic, Dallas. And so sort of from the optimist on the panel to some of the more boring people in Charles, who runs the growth capital, and Ivan, the more software focused space.
I've got a win today.
Yeah, no. In all seriousness, though, you guys obviously run different strategies targeting technologies at different technology readiness levels, but it still all has an impact. Even if you don't want to speak about space specifically, but some of the real leading edge stuff, how does that have flow down effects to what you guys both do?
Yeah, I mean, we've got an active opportunity in that space. So I can have some words around this, but why is mining and space linking up? What we've learned in ruggedization and remote operations and so forth is very valuable to NASA, and I was hanging around with the head of NASA Swamp Works, which is their skunk works. He gets a chance to dole out money to a lot of the ventures all around the world, and shared lots of insights and with me over a few days in Perth at the Robopalooza event. And one of the things I got out of that was understanding it's not just a one-way street, it's a two-way street. The investments that NASA's made over the last 50 years in sensor technologies and other areas, there's opportunity to bring them into the mining industry, and we've got one such opening, and already was the technology used on Mars and has been already applied to oil and gas. Now wants to look at coming into mining, which is a mineralization technology, and it blew my mind. Like, this is next gen, next step. So one of the things I didn't understand commercially, but I do understand now, because I thought, gee, if it's NASA, it's going to cost a lot of money and mining won't pay for it. That was my starting position, so why would I get out of bed? My next thing was to understand, well, that's because if we got rid of all of what you've got to do to get into space and you unwrapped it and you got back to the pure technology level, then you can get a price point that could come into mining. And that's an opening to look at, what we're seeing as the reverse, getting access to those technologies. They could be licensing deals, they could be commercialization, lots of models, but that's quite exciting at that level to bring that to mining as well. So that's all I've got to say on space mining at the moment.
I'm going to jump in very quickly because you said a comment I wanted to pick up on. You said about mining companies. I don't believe they may the future companies who do mining. It could be a Google, it could be a Amazon, it could be some other company like those sort of companies like Volkswagen could come miners because the miners are too slow to get there, and the same in space.
Tesla mining, see Elon out there.
Geologic or AI mining.
Charles?
So we run closed-end 10-year funds, so that means space mining is probably not something that we are going to be looking at. I'm sure it will happen, I don't know when, and I'm sure there's potential value there. I think, though, to Ivan's point, there's a lot of technologies. Australia has some pretty good capability in terms of remote operating centres, in terms of putting robots in dirty and dangerous locations. I think we underestimate how technically sophisticated and able we are at this. And I think these applications definitely have potential in space, and the sensing, no question. I mean, we see stuff all the time, increasingly, where people are using, satellite-based sensing technologies to see stuff down on Earth to support terrestrial mining operations. So, the space stuff I'm sure will happen, but yeah, probably not in the time frame of our fund.
Yeah, no, and it's incredibly valuable that we have Charles, sort of capital at your stage of the journey, because a lot of work goes into getting the technologies ready to go to market, but then often getting them from that initial point of traction to being true businesses is a completely different step. So no, as much as I was sort of jokingly taking the mickey, it is interesting to know that that growth capital journey is equally a role that people can play in this tech space. I guess, sort of to round out the discussion, and I want to give you each, a bit of time to talk through each of the points. Your big bet, or if it's not a singular big bet, your current vision for what technology is going to look like sort of over the medium to long-term horizon as it relates to mine management, because that's what we're here to discuss.
Sure. So, because I'm a portfolio manager, I cannot come up with a single big bet. I would say spread your risk, because you'll get a good return. I think that the way we think about it is we're not omnipotent and we are not clairvoyant. So when we invest in a company, we don't know which one's going to succeed, even though we believe they all will. But I think there's an enormous amount of opportunity out there. There's some great innovations. If anything, the number of smaller companies with genuinely innovative, exciting technologies to help transform the mining industry and how they operate, it's accelerating in my view. So I think it's a great time to see these, and I'm sure there'll be many more opportunities coming forward.
Yep, I agree definitely agree with Charles, and maybe a big bet. I think the simulation area for Moss, or looking at mine operations, is something that has done a step change in the last 5 years, with AI being able to integrate the isolated silos and put a vision across that to optimise how your mine is operating. And that is something we've seen in the market that's developing, and that is almost real. I wouldn't say they're fully integrated. They're still operating in verticals, in delivering a promise of tomorrow of having that fully integrated view across the value chain or the chain operations in the business. And I think that's probably where we need to go to unleash more value for the mine. And I think there's going to be the next 5 top companies, and I'll link it back to what you've been seeing with RPM Global being bought, Micromine being bought. I was fortunate enough to build Serpat, which is an old dog now, we're called Desoji over, but that was 30 odd years ago. This is the step change. It's here, and this is the one that would probably wipe that out in legacy somewhere down the track. I think that is a pretty significant integrated view, delivering on a real-time basis insights and operational decision-making with augmented decision support for mine managers.
Okay, now my big bet is going to those organisations that work across industries. So we talked about, obviously we're in mining, but we talked about space already. There's agriculture, there's defence, and there's oil and gas. Those industries are all fairly high-tech. And we're seeing now a lot of, particularly Austmine's point of view, members across all those sectors. And we're seeing mine members going out to those sectors, other ones coming back into that, from those sectors back into mining. So to me, the answer is going to be the big bets on aggregation of technology that works across those different sectors, that will then pull together a compelling value proposition that maybe 2 or 3 companies joining into one bigger one through these guys' great work. But things that will include digitalisation, so something that's got digital with a hard product, a little bit of AI, but not driving the whole process, but giving you some operational decision-making points you can then make yourself as a person. And so the future of mine management for me in that area belongs to those who do combine the data, the capital, and the human intelligence piece, which we can't always forget about. The people are still important, and it's got to be backed up by protected IP, so that you've got something tangible to sell and to do. Interoperable systems, so that means you can plug in and play anywhere you want to play. And the trusted digital records, the blockchain we talked about before, those things are what for me, the trusted bet we're backed up on. So think about all the industry sectors you could play in, the scalability of your product, that's where you place your big bet, and the impact at the end of the day on the customers that you work with, because that's what will make the business successful or not successful, the customers buying the product. So it's teamwork, and I'll leave it at that.
Great answer, Dallas. And I think that sort of goes to the heart of, and we deliberately didn't speak too much about it, but the buzz of AI at the moment, that whole human intelligence factor, there's some research that just came out of MIT that's actually showing that as a population, we're starting to think less. And so Ivan mentioned enduring competitive advantage. It might be as simple as thinking, and that's I think those sorts of things are going to shine through, obviously hand in hand with this amazing technological development. Look, would like to thank you all. I think this audience and me personally, as a member of it, we've been very grateful for your time. You're all incredibly esteemed in this space and have done a lot, and certainly set the industry up for continued success. So thank you all for joining.
Thank you.
Thank you.
I'd like to thank you all for staying.